Across the United States, the rhythm of ordinary life is faltering. Groceries cost more each week, rents climb faster than salaries, and a doctor's visit can erase months of savings. The economy still grows on paper, yet millions feel poorer, more anxious, and more uncertain about the future. This is not panic or prophecy. It's the measurable unraveling of everyday stability. In this report, Global Lens examines the facts behind the headlines, why the basic cost of living keeps rising, how debt and distrust feed each other, and what the data reveals about America's uneasy decade ahead. Stay with us and subscribe to Global Lens for clear, evidence-based stories on how societies are reshaping in real time. Chapter 1. The Vanishing Middle-Class Comfort. For half a century, America's middle class symbolized balance: secure jobs, affordable homes, reliable healthcare. That balance is breaking. Inflation since 2020 has raised household costs by roughly 25%, while median wages have grown only 15%. A worker earning $55,000 today has the purchasing power of $45,000 just 4 years ago. The average family now spends about $1,200 more each month on food, housing, transport, and insurance than before the pandemic. Personal saving rates hover around 4 to 5%, well below the 9% pre-pandemic norm. Roughly 2/3 of adults live paycheck to paycheck. Instead of accumulating wealth, families accumulate interest charges. Financial stability hasn't disappeared overnight. It has been traded for short-term survival on credit. Chapter 2. Retail in Retreat. The so-called retail apocalypse dramatizes what is really a slow-motion restructuring. More than 80,000 stores have closed since 2017. Online sales now make up 22% of U.S. retail, up from 15% before COVID-19, leaving empty shelves of malls across the country. When an anchor store leaves, small tenants lose traffic, towns lose tax revenue, and workers lose community anchors as much as paychecks. Tariffs have nudged prices upward, typically 5 to 10% for targeted imports. But the deeper cause is automation and shifting habits. A single Walmart closure can erase 300 jobs and millions in local revenue. What remains is not collapse, but contraction. Fewer stores, fewer workers, and less human connection in the places where America once gathered. Chapter 3. Housing, the New Imbalance. Homeownership was once the foundation of the American dream. Today, it's the weight that drags it down. 30-year mortgage rates have hovered between 6 and 7% through 2024-2025, the highest sustained level since 2001. The median home price is $422,000, about 40% higher than 2019, while median household income has risen only 18%. Inventory is short by roughly 4 million homes nationwide. Even modest buyers face monthly payments over $2,700 before taxes or insurance. In overheated markets like Austin or Phoenix, prices have corrected 10 to 15%. Yet affordability remains worse than at any time in 4 decades. Half of renters now spend more than 30% of income on housing, and 12% spend more than half. Young adults delay families and relocation because housing costs have turned mobility itself into a privilege. Chapter 4. The Tourism Tightrope. Tourism once generated $240 billion a year and supported 9 million jobs. In 2024, international arrivals were still about 9 to 10% below 2019 levels. High airfares, a stronger dollar, and visa backlogs, not politics, keep visitors away. A round-trip ticket from Europe to New York averages $1,100, roughly 40% higher than before the pandemic. Hotel rates climbed 25%. Restaurant bills 30%. Domestic travel has filled part of the gap, with national park visits hitting record highs. Yet coastal cities reliant on foreign tourists, San Francisco, Honolulu, New York, report hotel occupancy rates about 10 points lower than pre-pandemic. Tourism hasn't collapsed. It has fragmented, reshaping who profits from leisure and who is left behind. Chapter 5. The Relentless Cost of Living. Inflation has cooled from its 2022 peak, but remains embedded. Food prices are 25 to 30% higher than in 2019. A gallon of milk averages $4.30. Eggs, $3 a dozen. Ground beef, $6 a pound. Electric bills reach $170 monthly. Natural gas, $80. Gasoline, $3 to $4 a gallon. Each line item looks modest. Together, they drain optimism. Insurance magnifies the squeeze. Auto insurance premiums jumped about 20% in 2023 and another 11% in 2024, the steepest multi-year surge in half a century. Homeowners in Florida and California pay $6,000 to $10,000 annually as climate risk insurers withdraw. Healthcare premiums and property taxes complete the pressure circle. The American household isn't bankrupt. It's exhausted, paying more each month for the same life it already had. Chapter 6. Work without guarantees. Unemployment sits near 4%, but security has become rare. 17 million Americans now rely on gig or contract work. They are technically employed but lack paid leave, health coverage, or retirement plans. After expenses, rideshare and delivery workers often earn under $10 per hour. Even white-collar stability is cracking. Layoffs in tech, media, and logistics have revealed how fragile dream jobs can be. Manufacturing's modest revival, boosted by federal incentives, creates fewer positions because automation does most of the labor. The modern economy guarantees constant work, but no guarantee that work will sustain a decent life. Chapter 7. The Debt Domino. Debt is the bridge between wages and survival. Credit card balances reached $1.21 trillion in 2025, with average interest rates above 21%. Half of users carry monthly balances, and delinquencies are rising fastest among younger adults. Auto loans average $740 for new cars, $530 for used. Student loan repayments resumed in 2023 after a 3-year pause, draining hundreds from monthly budgets. Medical debt still burdens nearly 100 million people. Though small medical bills are being dropped from credit reports, the financial scars remain. Households stay afloat by refinancing debt, not reducing it. Economists call this the soft insolvency phase, when collapse hides behind punctual payments that depend on more borrowing. Chapter 8. Healthcare. Expensive by design. America spends $4.7 trillion a year on healthcare, 18% of GDP, yet tens of millions skip care. Employer-sponsored family insurance averages $24,000 annually with deductibles near $5,000. An ambulance ride can cost $2,000, a hospital stay, $30,000 to $100,000. About 40% of adults delay treatment due to cost. Rural hospital closures, over 130 since 2010, force some patients to drive hours for emergency rooms. Drug costs show the imbalance. Insulin that costs about $10 to make once sold for $300 without insurance. New laws now cap many seniors' insulin out-of-pocket costs at $35, a major step but far from parity. The system's brilliance in innovation is matched only by its cruelty in pricing, a contradiction that fuels the sense that even survival has become transactional. Chapter 9. Crime, Homelessness, and Frayed Trust. Violent crime rates fell roughly 5% in 2024 from pandemic highs, yet car thefts, organized retail theft, and drug overdoses keep rising. Shoplifting losses exceed $100 billion a year, prompting chains to retreat from major cities. Police staffing shortages of 10 to 15% stretch emergency responses. Homelessness jumped 12% in 2023, the sharpest rise since federal tracking began. Encampments in parks and transit hubs symbolize not just poverty, but policy failure, housing costs outpacing wages, addiction treatment underfunded, and public patience eroding. Even where crime improves statistically, fear deepens socially. People lock doors earlier, avoid public spaces, and internalize instability. A functioning society depends less on numbers than on the feeling of safety, and that feeling is fading. Chapter 10. A Nation in Debt. The federal balance sheet mirrors household strain. National debt surpassed $37.8 trillion in October 2025, about 121% of GDP. Annual interest costs are approaching $1 trillion, larger than education or veterans' budgets. While U.S. borrowing capacity remains unmatched, rising interest payments crowd out investment in infrastructure and social programs. Corporate and small business debt tell the same story. Cheap money borrowing during 2020 to 2021 has turned expensive. Bankruptcies rose roughly 25% in 2024 as loans reset at higher rates. It's not default that threatens, but constraint. an economy spending more to service the past than to build the future. Chapter 11. Why collapse feels real. Official data says growth continues. GDP up about 2%, unemployment low, markets steady. Yet 2/3 of Americans believe the country is in recession. They judge by grocery bills, rent checks, and healthcare invoices, not by spreadsheets. Economists label this gap a vibecession, prosperity on paper, pessimism in reality. People don't compare themselves to global averages. They compare to their own past. When stability slips away, perception becomes truth. The collapse most citizens feel isn't a single crash. It's cumulative uncertainty, the loss of confidence that effort will still equal progress. Chapter 12. Paths toward renewal. Decline is not inevitable. Housing supply incentives could ease rent inflation. Investment from the Inflation Reduction Act is already reviving manufacturing belts through battery, solar, and semiconductor plants. Real wages in lower income sectors are beginning to outpace inflation for the first time since 2019. Drug price negotiations and healthcare transparency laws promise gradual relief. Local resilience is also rising. Community credit unions replacing payday lenders. Urban farms reducing food deserts, and cooperative housing limiting rent spikes. These micro-successes prove change is possible when policy meets participation. But recovery depends on trust between citizens and institutions, workers and employers, voters and governments. Without that trust, even growth feels hollow. With it, renewal can begin from the ground up. Chapter 13. The Global Mirror. America's experience is a warning and a reflection. Across Europe and Asia, similar tensions, aging workforces, automation, housing shortages, sovereign debt, mirror the same pattern of high output and low optimism. Because the United States drives a quarter of global consumption, its domestic fatigue reverberates worldwide. When American families cut spending, exporters from Germany to China feel it. When the U.S. raises interest rates, emerging market currencies weaken. In this sense, the collapse of everyday life in America is not local decay. It's a preview of pressures spreading through advanced economies everywhere. Chapter 14. The Psychology of Recovery. Economic renewal begins in perception. When people believe tomorrow will be worse, they delay spending, investment, and risk-taking, the behaviors needed for rebound. Reversing that psychology requires visible wins: affordable childcare, safer streets, and faster healthcare service. Confidence grows when citizens see systems respond to reality rather than rhetoric. America has done this before. After the Great Depression, after the 1970s, stagflation, after 2008. Each recovery began with policy innovation and civic resolve. The ingredients exist again: productivity potential through AI, energy independence through renewables, and a young generation demanding reform over resignation. Whether those forces align will decide if the 2020s become an era of repair or resentment. The collapse of everyday life in America isn't a sudden implosion. It's an accumulation of strain. Prices rise faster than pay, public trust fades faster than repairs, and small comforts vanish one by one. Yet within the stress lies possibility. Decline, when faced honestly, reveals what must change. Stability can be rebuilt, not by nostalgia but by realism, by measuring progress in lives made livable again. If this analysis helped you see beyond headlines to the forces shaping ordinary life, subscribe to Global Lens for more fact-based stories about how nations, economies, and people adapt in uncertain times. Thank you for watching, and stay informed.